Hello, friends. Today I would like to talk about our tea industry in India. Did you know that tea is the most widely consumed beverages on the planet after water? And where does tea come from? We drink tea every day, morning, afternoon, night, maybe sometimes different fragrance of tea, black tea, green tea, lemon tea, whether it's roadside or a railway station or airport. Tea is something, unavoidable as far as Indians are concerned. Wherever Indians go, they drink tea. Especially during Corona times, they drink a lot of tea. We all drink ginger tea, lemon tea, cinnamon tea. So we should know where this tea is coming from. This tea is coming from mainly tea producers. There are five countries which are the tea producers in the world. The first one is China, India, Kenya, Sri Lanka, and Vietnam. Tea can only grow in specific areas with limited temperature range and is highly sensitive to drought. That is why the tea prices are, affected by the heat and rain concern. When the rain is not the heat also both are the problems, and it is not adequate. The tea production, it comes. And on top of that, last year the government of India made a decision to ban the 20 pesticides which is used in the tea plantations. You all know yesterday, day before yesterday, in the tea stocks value is going up. All the tea stocks, tea company stocks, is almost a lifetime high. Day before yesterday itself, it is 16%. It is high compared to the previous, and it is going to soar further. So this is what about the tea is. Tea prices are going up. Tea stock prices are going up. Why the stock price is going up? Because the tea price are going up. This is what the industry is concerned. And before that, I would like to talk something different. That is, you all know about efficient market hypothesis. Do you know a professor called Eugene Farmer? He got Nobel Prize for this hypothesis. What is efficient market hypothesis? This is primarily derived from the concept from his book. He wrote a book that book name is Efficient Capital Market Review of Theory and Empirics. What the book says is that Farmer is saying, you cannot beat the market. Virtually impossible to consistently beat the market. I had seen many of the managers in UAE and India. I worked many companies. They are all like big shots, and they come and shout, I can beat the market. I know the market. I know everything. These type of managers you can see, especially in UAE or other Gulf countries. But actually, they don't know what is happening in the market, because these efficient market hypothesis says there are many participants in the market. So you see, if you go to the market, for example, you take a company X, like X company, there are 10, 15 or 100 companies. Like, for example, there is not one single tea producer in India. Tata is having plantations, RPG Group is having plantations, Malayalam Manorama plantations are. There are a lot of tea. There are players in the market. Tata is having coffee plantations. So what he's saying that these participants in the market, they share equal access to all relevant information. All these companies know what is tea plantation. They have been doing this since 120 during the British time in India. They have been in the tea business. They know what is the market. They know. They have the information, equal information. Nobody is having an edge over the information. Today's market is every company in the market is having equal information. You have one information, your competitor also know better than you. That is why he is become your competitor. They are intelligent and objective and highly motivated and hardworking people. So what he is saying that because of the collective efforts of these participants, this information is reflected fully and immediately in the market price. So all this information in the market are there. For example, I will tell you, in stock market or Wall Street or Bombay Stock Exchange or New York Stock Exchange or wherever you see. For example, if you see Alphabet, Apple, this ExxonMobil, this type of companies, Nvidia, Tesla, all are run by either Elon Musk, Bill Gates. Their wealth is displayed in the dashboard. Every day he knows in India, there is an index like Tata, Birlas, Ambani's, Goenkas. There is an index. So that is, in fact, I say the Bombay Sensitive 30 index is their index only, except hardly three, four, government companies. All the other companies are in Tata's, Ambani's and Mittals. So every 3:30 in the afternoon, they know that what is my valuation, what is Tata's valuation, or what is a Mittal valuation. Not only everybody can know. I know, everybody goes look at the billboard. You know what is their valuation. That type of information is now available in the market. Suppose tomorrow money wants to buy his own company, he won't get a discount like in a supermarket. You see, I will say you are a owner, I will give you discount price. No, he can buy only at the closing price in the same day in the market. For example, if Nvidia is closing $200, for example, Nvidia owner, if he wants to buy back his share, he has to pay the same price. He won't get discount. There won't be $5 or $10 discount for it. There is no free offer in it. So market is very fair in that case. So because the market participants, instantly move to buy. If the asset is cheap, they instantly go and buy. Or if the asset is price is going up, they may sell also. So in that case, the market is setting the price, not you. The market set the price, not you. That is why market won't provide a free lunch to everybody. The risk you take, the risk asset must offer. The riskier the asset, the returns are also, very high. This is the one thing Eugene Farmer is saying. So in that scenario, what I say, there are many people in the market. Now the market is, the bull markets, the all-time high. Indian economy is doing well. Not only India, even all the world market. So many people in India think that. So I will wait for a correction. I will wait. I will buy when during the corona time the prices drop. Wait, if I get that price only, I will buy the stock. That is a value buying. I think that value buying concept is obsolete now because everything is priced in. Today, every product is priced in. So you won't get, 10 years back price or 20 years back price. You are waiting. You have to wait. I don't know. I don't think it will be. As per the Eugene Farmer's theory, if it is efficient market hypothesis, market is so efficient, you won't get, like what you call value buying, I'll buy below the intrinsic value. Do you think you get Reliance below the intrinsic value? I don't. That is something debatable. So this is something I want to discuss. So most of the people think that so the downside, I'll buy only the downside, the risk matters. Why it is downside? Why it is going down? Then it is going further down and down, so you lose money in that thing. So that may be the most appropriate time for a value investor. I don't know when that time will come. There is a famous writer, his name is Mark Twain. You all know Mark Twain. Mark Twain said that there are two times in a man's life when he should not speculate. That is when he can't afford or when he can. So many people don't know the difference between investment and speculation. So that is what I want to say. I will discuss about the T stocks, this valuation, everything. I will discuss about after this. Now let us look at the valuation of Harrison's Malayalam. Harrison Malayalam is a part of Goenka Group. This company is incorporated in 1978. This company is engaged in plantation of tea and rubber. Current market cap is 412 crores only. Highest recorded price is 256. That is the all-time high. Currently trading at 223. So you see the book value of the stock is 77. Price to book value 2.87. It's not that expensive. But it's a company showing a sales growth last 3 years only 2.2%. But if you look at the PE of the company, it is very expensive, 1,470. So I don't see this company is worth buying. now because it's 1472 P. What money you can make? So that is the valuation of this company. Other company is Jayashree Tea Industries. This is also a big guy. That is BK Birla Group. They are the biggest exporter, planter of bulk tea, CTC, and they have 17 or 18 estates, tea growing regions. Today is trading at 121. This also very expensive. 134 is the 52-week high, and return on equity it is minus 4.3. Profit growth they are showing minus 643%. I don't see any reason now to invest in this. If you look at the 50-day or 200 AMA, stock is trading about 200 AMA. Buying range comes approx. If you get somewhere around 90, below 90, maybe you can. There is a margin of safety, valuation comfort. It's at that level only. Other is Canco Tea Industries. It is trading 81 rupees. Canco. This is also a Calcutta-based company. 87 is it is the all-time high for the stock. But this also, I don't think sales growth is negative, and the cash flow, okay, it is comfortable. Current asset to liability, they have more liability than asset. I don't think this is also a right company to invest money. Tyrone Tea Company is another company. It is currently trading 111, 120 is the highest. This is also a company based in Calcutta, manufacturing CTC, Orthodox tea, but they are not paying any dividend. Stock P is 15, industry P is 28. But this company operating profit growth, if you see, minus 53%, minus 53% operating profit growth. Do you think it's a wise investment? So these are the tea companies. Just I go through it. I don't think any tea companies worth investing now. All the stocks are trading about 200 DMA level. So these companies you should get somewhere around 80, 85 level. Then I think it is you get a valuation comfort. But I would like to say about this tea companies in India. What happened today? Every boy in the street want to get rich. That is a trend I am seeing. When I was young, we never thought of becoming rich overnight. We thought of working hard. We never thought of money also that time. We thought of only how to get a job. At that time in India, it was difficult to get job. Today there are many options. Today, if you see every college student, or every guy in the street, they want to get rich quickly. That is why you see the lottery ticket sale. Even Abu Dhabi lottery, or what can I say, Abu Dhabi duty free, or people are buying lottery every day. Why? They want to get rich overnight. That is what the generation of today. That's the biggest speculation. Speculation and gambling. That is what they are doing. So there is a confusion. Which are the true investment. True investment. Some people say I have an artwork of M.F. Hussain or Pablo Picasso or Salvador Dali. This can fetch millions of dollars. Or I have antiques of different varieties, rare coins, baseball cards. These are all not investment. These are all simple speculations. These by contrast, collectible throw off no cash flow. These only cash flow they can generate is by selling. When you sell the painting only you make money. Otherwise it is only painting. So dear friends, what I want to say, investing is a serious business. It is not an entertainment. Don't take it as an entertainment. It is a very, very serious thing. It requires appropriate mindset and intelligence. So that is what I want to discuss today. Thank you. So kindly subscribe my channel. If you find my informations are useful to you, I request you to subscribe my channel.